In his Wall Street Journal op-ed out yesterday, former Federal Reserve Vice Chairman Alan Blinder writes, "What is it about August? Though it's only August 17th, the U.S. economy has already been downgraded twice. One of those downgrades was ridiculous. The other was serious." Well, for more on his op-ed, Alan Blinder joins us now over the phone from Princeton, New Jersey. Thanks so much for joining us, Professor Blinder. Well, let's start with the easy one, the ridiculous part of the downgrade.
Well, I was referring there, of course, to the S&P small downgrade from AAA to AA+, which is not a big deal, except the symbolic statement that the U.S. Treasuries are no longer the safest asset on the face of the earth, which investors clearly don't believe a bit.
Now, S&P at this point is basically, the markets have sort of said that their rating is irrelevant. As you point out, we've got 10-year treasuries down at 2.03%. Let's talk about the more serious downgrade you were referring to in your op-ed, which was the Federal Reserve statement.
Yeah, the Federal Reserve said in its own measured way that it had dramatically downgraded its assessment for the strength of the U.S. economy now and in the near-term future. You know, the Fed doesn't use dramatic words, but if you read between the lines, it was a quite substantial downgrade.
Now, Professor Blinder, in your op-ed, you say the Fed violated one of the most revered canons of central banking, which was always keep your options open. Clearly,
yes,
they were trying to calm the markets, and we did actually see quite a rally on what was a turbulent day, but certainly a turbulent week. So at least there was a momentary calming of the markets. But why do you say that they were violating one of the unspoken rules of Fed government?
Well, they've basically committed, almost committed. There are escape hatches, but they almost committed themselves to hold the Fed funds rate at its current near-zero level for nearly 2 years. That's a long time. First of all, the Fed has never, to my knowledge, made a commitment like that with a date on it. Never mind whether it was 2 years, 6 months, 4 months, anything. They've always used vague phrases like extended period, which has been the one they've been using for a while. Never put a number to it. Now they have. That's point A. Point B is it's a long time. It's nearly 2 years, and while things look pretty dark right now, which is the reason for the Fed's dramatic move, they might brighten in the next 12 to 18 months, in which case the Fed will regret having committed itself the way it did.
Well, do you think, Professor Blinder, it's because Ben Bernanke does believe that things are extremely dark out there and possibly believes that we're at greater risk of another recession than most economists are even pricing in?
Well, I was with you 100% to the last phrase. I think most economists have turned pretty pessimistic. I think the Fed was a little bit late in turning pessimistic, not very late, but a little bit late. And a lot of us, I don't claim any great perspicacity on this myself. I was much more optimistic at the beginning of this year than I am now. Things have turned for the worse. So to the basic point, yes, the motivation for Bernanke's quite dramatic change in policy and toleration of a 7-3 vote, which is extraordinarily unusual, is clearly that he's worried about the economy and feels that it needs further help from the Fed.
What do you think the probability is that we enter into another recessionary period?
I don't think that's too high, and I don't think Bernanke thinks it's too high either. But the more important point there is growing at 1% isn't much better than a recession. I mean, is there really such a dramatic difference between growing at +1 and growing at, say, -0.5, which would be a recession?
Right.
I mean, it's a difference. I'd rather have the +1. But
clearly,
+1 is very unsatisfactory.
And then, very quickly, do you think there's another chance of a QE3?
I think there is. I think given what the Fed did and said, the chances of it doing something else to stimulate the economy probably this year are reasonably high, and among the options, probably QE3 is the most likely.
Okay, we have to leave it there. Thank you so much for joining us this morning. That was Professor Alan Blinder, former Federal Reserve Vice Chairman, joining us live from Princeton, New Jersey, saying QE3 very likely before year end.